Right, I think we're probably good to go. So good morning again, everyone, and thank you very much for joining our webinar this morning. The topic, as you can hopefully see on your screen, is adapt or pay, the financial imperative for climate resilience. So a super interesting topic. We're glad that you're here to join us, and we will get kicked off on the content quite shortly. I'll just do a few introductions quickly. I'm Noel Dowds. I am a distribution consultant here over at Zurich, UK, and I am joined today by Nick and Nehar, who are going to run through the slides, the experts on these topics. So before we hand over, I'm just going to do a quick bit of housekeeping, if that's all right. So please note the call is being recorded, and we will be uploading this recording to YouTube after the session. So keep an eye out in your inboxes. We'll send around a follow-up email and send that around. If you've got any colleagues who couldn't make it today or anything like that, feel free to forward that on to them. The format of today's session, we'll have the presentation and then we will have a Q&A follow afterwards. So if you've got any questions that you've brought along with you today, or you something comes up as the presentation is going on, please do just put it into the chat or into the Q&A function, and we will pick through these at the end. The only caveat being that there are no underwriters on the call presenting today. So if you have any kind of underwriting questions, Nick and Nehar will not be able to answer those directly. However, feel free to send us an email, and you can respond to the follow-up email we send around afterwards with any underwriting questions, and we'll get back to you. So, guys, if it's okay, I will hand over to you.
Perfect, thank you. Yes, so as Niall said, we've got quite a packed agenda, but there's lots of times for questions at the end. So yeah, I'm Nick, so I'll be talking through some of the topics today, and then my colleague Neha will be doing a demo a little bit later. But yeah, do feel free, if questions do come to mind, just pop them in the chat and we'll get back to them. But yeah, so we were here for Adapt or Pay, the kind of main message being that we're really just trying to help customers understand the value of adaptation. And to do this, you really need to understand exactly where your largest losses will be for individual sites or across a portfolio. So I hope by the end of the session today, you can really understand kind of the value of adaptation and why we should act early. Just to kick off, for anyone that's not worked with ZRS or Zurich Resilient Solutions, a little bit of background about who we are, what we do. So we're the risk advisory service of Zurich Insurance. So we're our own entity, but we use kind of our years of experience in Zurich Insurance, kind of our risk methodology, and we now have our own risk advisory service. So we kind of have our three core services. So that being kind of our core risk engineering, so looking at risk to property. And then we have some more emerging risks, so within our climate resilience team and also our cyber resilience team. But we all use a similar methodology. We're just trying to understand where are the risks for customers across their portfolio, and to understand risk, we use this image, which you can see. So we want to understand what are the hazards that could impact an organization? What are the exposures within that organization that might be impacted by that hazard? And then what control measures are organizations using at a high level or at sites in more detail? And once you understand sort of the value of all three, you really understand, okay, what exactly is the risk to this organization? Just because you have a high hazard, that could be a flood risk or a wind risk, doesn't mean that you'll be impacted by that hazard. That really depends on your site's vulnerability and that kind of level of control at that site. So that's a little bit of background of who we are. So just kicking off the agenda. So we're talking a little bit about climate change, the impact of businesses. So this is at a global level and within the UK. Then we'll move on to climate adaptation. So really trying to hone in that message. This is an investment, not just a cost. So we want to help brokers kind of help communicate the value of financial losses. Where would they start? There's a lot more terminology introduced when we're looking at financial losses. So we're just trying to make it really easy. Where can customers start? Where can they see the biggest value? We then have a live demo from Neha, who will show you our climate spotlight. So this is a tool that can help customers really prioritize where to undertake climate adaptation by really understanding where are those large losses likely to be. We'll then finish off with a case study at the end. So this is where we're using financial losses for a customer at the moment. So if you take anything home today, there's a couple of key messages. So in the UK, we've got 5 major hazards. This is flooding, overheating, wildfires, drought, and storms. So these hazards are interconnected and they can cause disruption to our economy, our health, and our communities. Our buildings are our front line of defence. There's no climate resilience without a resilient built environment. So these are our homes, our workplaces, our public buildings. And then lastly, I'll repeat myself a lot, but preparing in advance is not just safer, but it's also it saves money further down the line. But put some context behind this. So how is climate change impacting businesses? So climate change is already putting unprecedented pressure on our communities, our infrastructure, and our buildings. So just in the UK, we've got 6.3 million properties in England already at risk of flooding. And this is likely to rise to 8 million by 2050. So this is looking at 1 in every 4 properties will be at risk of flooding. But it's not just flooding, we also have a very high heat exposure. So in 2022, we had 3,000 heat-related deaths from the 2022 heat wave. We have had quite a good response from this. It's really varied. So in some areas, we're reacting to kind of this heat threat and changing the way we work, changing how we retrofit our buildings, trying to kind of raise awareness. But this isn't happening everywhere. So to put a bit more context behind kind of the global impact of climate hazards. So this is a report that was released by Zurich this year, and it's looking at the economic impact of climate-related extreme weather events. And you can see that increasing trend. So from 2014 to 2023, we're seeing that increase in disasters globally. So damage from global natural disasters in 2023 alone was 380 billion. And of that, 118 billion, only 118 were covered by insurance. So looking a little bit further back, we can see this isn't a kind of a new phenomenon. Since 1994, we can see an increase in global insured natural catastrophes. So we've previously said, climate change is a risk for the future, but we can already see that we're seeing an increase in losses globally and at a UK scale. So to put it into context for the UK, this is a graph just illustrating exactly where are these hazards impacting. So at current day, we can see this is cut down by business losses, windstorm, coastal flooding. As we move forward, 2050s and 2080s, we can see it's actually businesses that are really starting to get impacted by these different hazards. But it's not all doom and gloom. So there's some really good reports that have come out recently to show that where we are adapting, we are seeing a return of investment. And so to sort of support this, we've identified where are our biggest risks in the UK. So this was a report that identified kind of impact to the natural environment, to homes, but also to businesses. So this is just a snapshot of that. But what was really interesting is at the moment, if you divide the risks between the public sector and the private sector, at the moment, most of the public sector is being impacted. But if you go forward, some of these top risks are really going to impact the private sector a lot more. So just to kind of pull out a few of these different risks. So when we're talking about kind of high or very high risks, this is talking about where costs will be over the hundreds of millions of pounds per year. So we can see that we're seeing an increase in flooding to businesses and also risk to finance, investment and insurance. But again, they've also highlighted there's also an opportunity here. So as we kind of change, kind of in the UK, we're changing to more of a greener economy as we kind of transition to kind of green energy, net zero. There's lots of opportunities where companies can sort of adapt early, change their goods and services to respond from kind of customer demand and kind of how we prepare for climate hazards going forward. So it's not just seen as a cost that you need to do, but it also there's lots more benefits for businesses. One thing that I'm going to keep repeating the whole session is the most compelling argument for climate resilience is its undeniable economic value. So when we talk about kind of value of adaptation, it's really good to look at it as kind of benefit to cost ratio, and this can vary from 2 to 1 or 10 to 1. So just as an example, I have a few adaptation measures. So this is from the same report. And what we're basically looking at is a list of different adaptation measures and that kind of benefit to cost ratio. So at the top, you can see the largest benefit to cost ratio, which is 10 to 1. You can see these are in water efficiency measures, heat alerts and heat wave planning, weather and climate services, included for early warning systems, surveillance and monitoring as well. So this is what we see this a lot with customers at the moment, where when we undertake climate resilience work across the portfolio or at a site level, some people think it needs to be really costly. So it has to be kind of physical measures, so flood barriers, flood defences, installing cooling systems or heating systems. That isn't always the case. Some of the best things that customers can do is just being prepared for climate hazards. So invest in early warning systems. A lot in the UK, we're quite lucky. There's a lot of really good freely available services. So that's from the Met Office, which can be health warning alerts when it comes to temperature, but also there's lots of free flood alerts that you can sign up to. Kind of the ones that vary a little bit more when it comes to cost to benefit ratio are more these kind of physical adaptation solutions. So flood resilience and flood resistance. What I mean by that is a building's ability to sort of, if a flood happens, how quickly can you clean up? Whereas flood resistance is more to do with stopping water coming in. So there's a whole variety of different climate adaptation solutions that companies can take. Not all of them for every single business, but the best thing you can do is see what you're doing really well to start with. Don't sort of reinvent the wheel. What do you do across your organization, such as good maintenance, good repairs, and sort of continue doing that, and then find out where those other gaps lie. So just moving on to how do we communicate the value of adaptation? So this is one thing that from our team in the UK that we found a little bit tricky to start with is some people within an organization understand really well the value of adaptation, and sort of if you do something now, you're more likely to save money in the future, protect your assets, protect your workforce. But this isn't the case across the portfolio. So if you're trying to communicate the value of adaptation to kind of whoever's holding the budget or kind of CEOs, you need to come with the financial value. So can you tell me exactly how much money I'll save if I implement adaptation, and what's likely to be the loss if I don't do anything? And you can do this over several different ways. So you can look at a portfolio view, so lots of assets, not as granular, but it helps to prioritize. If I've got 200, 300 assets globally, where do I start with climate adaptation? You can also look at it from an individual site view. So I know this site is really critical to our organization. I know it doesn't have very good flood defense, kind of climate change defenses. Let's look in more detail at that site. If you're starting off, you want to look at hazards that are material to an organization. So not every business will be impacted by the same climate hazards. If you're in the agricultural business, you're probably looking more at precipitation, drought conditions. If you're kind of more a production line and you're sensitive to temperatures, you might look at that, cold or frost. So it's really understanding not everything will be material to you, but starting off on climate adaptation, just really mapping out what are likely to be those climates that will really impact my organizations. And then to do that, you'll find out, okay, where do the cost of adaptations outweigh the loss? So just to go in a bit more detail, so who will this provide kind of the most value for? Who should undertake financial quantification? And there's lots of benefits to it. So what I've already said is loss prevention. So site managers support with resilience planning and risk reduction through adequate adaptation measures. So the better you know the losses, the more you can prepare. So there's also more pressure from reporting regulation. So this is just a snapshot from CSRD. So we need to sort of describe the financial impacts of extreme weather events, so including possible indications on days of business interruption, associated costs and repairs. So as we're kind of as there's more kind of regulation coming through, it's good to understand not just what the hazards are, but also as an organisation, do you understand where those large losses are likely to be? It also helps risk management. So risk managers can explore climate risk at a company level, and this helps improving resilience. So quantifying risk and at a company level helps to inform kind of the wider variety of stakeholders and hopefully release budget for climate risk management. It can also support with insurance buying. So optimal insurance coverage depends on understanding how locations contribute to the overall potential annual loss. So when you're kind of buying insurance, you can prioritize sites for risk mitigation. So if you have a wide portfolio and you don't have the right insurance, it's really good to understand where are we likely to be impacted, making sure that we have the correct level of risk transfer. So that's a couple of reasons where financial losses are really benefiting different stakeholders. Just to reiterate what I mentioned previously, so financial losses can come in lots of different forms. So you can look at it from a portfolio. So in two ways. So what we call AAL, or average annual loss, is related to extreme event losses, but its output is at a company level. So you're looking at lots of different hazards across a portfolio, but you're also looking at the likelihood of those hazards impacting that site. So not every single site will be impacted every single year by the kind of maximum loss. So it's a bit more of a how likely is our portfolio as a whole to be impacted by different climate hazards. When you're looking at a site level, you're kind of looking at that really specific large losses that could impact a site. So kind of you could look at it as kind of worst case scenario. At a site level, you input quite a lot more data points, so you can be a bit more granular. So climate models are only as good as the data you put into them. So it's really good to understand. It's good to help to do a portfolio level assessment and help to prioritize exactly where those losses are. But then it's really worthwhile doing a bit more of a deep dive at site level, speaking to the people on the ground. The model will only put out, it's a global model. So it uses lots of assumptions and the data you provide. But as you go on site and you build a bit more of a tailored loss model, you can understand exactly where the vulnerabilities, the controls lie. You can also kind of look at what's historically happened at this site. So just to introduce the ZRS Climate Spotlight. So this is really designed as an initial screening tool. So there's two parts of the Climate Spotlight. You look at your climate hazard exposure. So this is where we have a list of over 10 climate hazards. So you're looking at just that hazard and exposure level, what I mentioned earlier. What are the climate hazards impacting your portfolio, and when are they impacting your portfolio? So that's sort of that initial portfolio hazard screening. You then move on to the kind of later section of the spotlight, and this is where we really tease out that financial loss model. And this is where we request a bit more data from clients. So at that site, what's the construction? What's the building constructed of? You know, is it masonry? Is it steel? How many floors are at that site? Are they above ground, below ground? What type of building is it? Is it a warehouse? Is it a school? Is it residential? So there's about 5 different data points that we use for our financial loss models. And this just helps us refine, if an event were to happen at this site, based on the building vulnerability, what would likely be the loss to that site. So there's sort of 2 parts. You've got that hazard exposure, which you can easily do for your entire portfolio. We just need to know kind of where it's located. But then the financial quantification just requires a little bit more data on the site in more detail. But this data is actually easier to come across than you think. So we always speak to clients and say, you probably have this data in-house already. So speak to your insurance manager. They will probably have data on kind of building value, construction type, when was it built. And there's also a lot of data out there already, especially in the UK when it comes to building. This is freely available. So don't be put off by the data inputs required for financial loss models. It's more than likely you already have this data in-house. And just to reiterate, the data that comes out of climate models is only as good as the data that goes in. So it's really good to sort of make sure it's as accurate as it can be, and to sort of use the outputs as a prioritization tool to then further understand where do you need to look at more detail at site level. I'll leave it there for my ZRS Climate Spotlight intro, and I'll hand over to Naya for a demo.
Thanks, Nick. That was a really good introduction to Climate Spotlight. I'll be giving a bit of a demo on first the hazard and exposure levels of Climate Spotlight, and then go into a bit more detail on those financial quantification pages a bit later. So just as an overview, Climate Spotlight is a portfolio analysis tool. So it's a great first step to really highlight some of those locations that are really exposed to certain hazards and take a look at that physical risk. But it's also quite good at the new financial quantification models that we have to identify where exactly those losses are going to be felt. So I've got the Climate Spotlight tool up here. This is the very first page, just as a brief overview. There's no climate data in this page. This is just customer data. With these climate models and dashboards that we have here, it's only really as good as you feed into. So the more you feed into these tools, the more you kind of get out of them. Here you can see we've got a geographic spread of some dummy data. Here is all of the assets and their locations, and we've also got their exposure values down here. Spotlight's really customizable, so you can easily change the view that you're looking at. Here we've got our own locations, but we could also potentially put in supplier locations. This could also be divided up into different business functions or different sectors as a customer pleases to. We can also look at a lot of different exposure metrics. So starting up here, we've got total insured value. But if you wanted to have a look at the property damage, or if you wanted to perhaps just consider the number of locations affected by certain hazards, it's very customizable, can easily do that too. So now moving on and pulling in some of that climate data, we can see here we've got a multi-year evolution. So this is quite a nice visual just to see exactly how your portfolio is going to be impacted by certain hazards. On the left-hand side here, we can see we've got some new toggles. You can again select certain hazards, for example, heat stress. So if you wanted to have a look at how heat is directly impacting people in an organization, we could toggle that on and have a look at that, along with many other hazards that we have available. The multi-year evolution page is divided up into these 4 columns. So we've got the current view over here, which represents, of course, how the current portfolio is affected. And we've also got the near term, the medium term, and the far term. So these are different time horizons. And again, it's super customizable. So you can select different time horizons if you wish. And we've also got down here the climate scenarios. So as Nick mentioned, we've got the 4 climate scenarios in there, and more information is always available in some of these toggles, but essentially they represent a customer's risk appetite. So if you wanted to have a look at what was happening in the medium term, slightly less risk averse, you could easily change the climate scenario and see how that changes the data. So now that we've kind of gone through the page, you can see here how much of the portfolio is impacted by certain hazards. For example, if we have a look at heat stress here, we can see that in the current term, we've got quite a large percentage of it affected by high and very high levels, but you can really see how much that grows, up to 84% of the portfolio being impacted by very high levels of heat stress in the far term, as well as some of the other hazards such as drought, precipitation and wind really increasing into the future. So having a look at this data is great, but what we really want to do is use this as a first step and pull out some of the locations that are of high risk. And this risk map page here is a great way to do that. So the risk map page here takes a look at not only the hazard data, but plots it against the exposure metrics. So let's just say, for example, we want to have a look at hail. And we want to take a look at that in the medium term under the most risk-averse climate scenario. Here we can see we've got all of our locations, and what we're really looking for is those locations in the top right-hand corner, which have a really high exposure. In this case, the exposure is the total insured value, and also a really high hazard level. So we can see that that's in the dark blue, that has a very high exposure to hail. You can easily hover over these sites and see, okay, this site's in the US, and this might be something that you want to pull out and have a look at in a bit more detail. So the risk map is great for pulling out those locations that have high exposure and high hazard levels. We also have another tool which is great for prioritizing sites, which is the multi-hazard ranking table. The multi-hazard ranking table essentially tallies up all of the scores from all of the hazards, and you can see here puts them in order of total hazard score, and pulls out those sites that are most exposed. This site here in the US again looks like it's highest exposed. It's got very high precipitation, tornado, hail, heat stress, drought severity, and also high hot days and frost days. If certain hazards are not of interest, or vice versa, if you are interested in, for example, sea level rise, again, this is super customizable, and certain hazards can be toggled on and off, and you'll see how the total hazard score will change and the ranking will change. Again, if you're not interested in the medium term, this could also be a great way to just assess your current risk, and really see how certain sites change. We can see here that that one site that was at the top in the medium term has kind of moved down. So we know that this is something that we may want to adapt and prepare for in the future. So that's a bit of an overview on some of the hazard data pages. We'll now jump into some of the financial quantification pages, which is another great way to pull out and prioritize sites that are of high risk. Going straight to the ranking table for financial losses, somewhat similar to the ranking table that we had before, but this time we've incorporated all of that financial quantification data. Again, here you'll see some familiar toggles on exposures and portfolios, and we've got another one on the return period, which I'll come back to a bit later in this page. So over here, we've got values for our total property value, the estimated total property loss, and also the days of business interruption. What's great about this page is that you can really see how much each location is going to be affected, and for each customer and their own asset, they may value something differently. For example, if you've got a manufacturing site which is really critical to all business functions, and you know that that can't be out for a certain number of days, or let alone a few weeks, the business interruption toggle here is great for having a look at that and prioritizing this table by that. On the other hand, if you're more concerned with the property loss, again, you could toggle this switch on, and this pulls up those locations that have the highest percentage property loss. What's also interesting about this page is that some of those sites that don't experience a large estimated property loss as a numerical value, it may just be because, for example, their total property value is lower. You can see that this site up here doesn't necessarily have the highest property value, however, it does have the greatest property loss. So that's another way of looking at it, not just how much you are losing, but the proportion that you are losing for that set location. Going back to the return period here, so this is a great way to have a look at different scenarios. In this case, for financial quantification, we've got 3 hazards. We've got flood, storm surge, and wind, and we're having a look at wind here. Now, a customer may be interested in a more extreme event, let's say a 1 in 500 year event, And it's quite easy to toggle that on and have a look at how that changes the data. We can see that we're going to experience a much larger loss if there was a more extreme event. On the other hand, we can easily look at events that are going to be less intense but more frequent. So how might a more frequent wind event affect this location? We can see here that the days of business interruption and property losses have, of course, decreased because it's less extreme, but it's still super valuable to know that these events are more frequent and this is what we could predict to experience. Moving on to the second page here, this is the portfolio ranking by business interruption, and also having a look at some of those damage ratios here. So again, for each customer, the what's critical to their business may be completely different. Let's say, for example, you have a warehouse that has some really high value stock. You may be more interested and inclined to have a look at the stock value rather than the damage to the actual property itself. In that case, again, you can easily toggle that on. Ooh, sorry, this just needs a refresh. Yep, we're back. So we can easily just toggle that on, and that shows the sites that have the largest, the greatest stock to damage ratio, for example. Likewise, if you're more concerned with the contents of the building, you could easily take a look at that, and that will pull out those sites that have the largest building damage ratios. What's also good about this page is that it shows, it can easily point out some locations that were perhaps missed by the other page. Let's say it doesn't have a very large total property loss, but it has a really large stock damage ratio here that can easily be identified. So for any of those sites that are perhaps lower in value but still contain very valuable items, or for example have a lot of days of business interruption, they can easily be pulled out from this page over here. Moving on to the last page down here. This page is great for having a look at how all three of the hazards will financially affect the portfolio and the site. So again, we have financial quantification available for flood, storm surge and wind. So this is great if you've kind of gone through all the other pages and identified, okay, this certain site looks like it's really exposed to hazards. It looks like it's going to experience a lot of business interruption, a lot of potential loss. This page is great to really just get a good overview of how exactly that's going to be affected by flood, storm surge and wind. So, for example, let's just maybe pick on our location in London. We can see here in this top right-hand corner, this graph shows that actually the most loss is expected from the building damage in a wind event. Likewise, we can see that if there was a potential flood or storm surge event, there would also be quite high losses associated with that as well. Again, we've got similar switches, so we can toggle that and change that to a 1 in 500 year event and just see how those values increase over time, just because it's a more severe event. What's also good about this page is that it's got some of the vulnerability data, and this is actually the data that we require to run this financial quantification. All we really need is these 5 pieces of data, which Nick mentioned before is often on hand and easy to get, meaning the number of stories, the year built, the NICE code, and some of the building material. And from this level of data, we can get quite a high value output and have a look at all these financial losses just from these 5 metrics. As Nick mentioned before, they're often available in some of the insurance data, so they're quite easy to get your hands on if you know that you've got a certain sites that are really critical to a business function or really critical to a certain customer, it's great for pulling that out and just having a look at that vulnerability data in a bit more detail. Yeah, I think I'll leave it there for the Climate Spotlight tool and hand back over to Nick, who will speak a little bit more about some of the damage ratios and curves that we use for this financial quantification.
Perfect. Thank you, Neha. That was a really useful guide through the Spotlight tool. I'll just go back to where we were seamlessly through. Here we go. So yeah, just like Neha said, I'm just going to build, I won't spend too much time on this, but if you're trying to communicate to customers, why do we need to include all this data? What's the value of it? So when we're looking at, so I'm just using the data we use in the Climate Spotlight as an example, but we're looking at that kind of hazard event. So what is the flood height in that area? And then we're working out what's the average damage that would impact that site. So when we're looking at damage ratios for the financial loss model, we're looking at average losses that happen for buildings. And then the more you refine the data, so if you share with us exactly what Neha has just listed, construction, number of floors, you refine that vulnerability. So if you have a high vulnerability, you'll see that that damage curve kind of increases, and if you have a low vulnerability, it decreases. So again, it is based on average losses, but the more data that customers can share with us, the more we can refine exactly what that damage ratio curve is likely to be for that one individual site. So at this point, we're just looking at one site in particular, looking at the data for that one site. You can then prioritize across a portfolio. So where are the largest losses likely to be if you're looking at worst case scenarios? But again, it's just really good to reiterate, this is a prioritization tool to help kind of your next step in climate resilience. Okay, we understand where are my top 20 sites, where do I need to go and find a bit more information on the level of controls, historic events, what are the people at that site doing to sort of reduce the risk. So it's a good place to start, but it's in no way to a kind of a solution to go implement this adaptation tomorrow at this site. So it's a really good way just to sort of understand portfolio, the risk across a wide portfolio. So I'll leave the kind of damage ratios models there for today. We'll just move on to a bit more of how are customers using this data. So just to use, at the moment we're working with a UK car manufacturer. So they have lots of sites across the UK, but they also have lots of sites globally. And this is mostly their suppliers. And they're kind of, from my understanding, they're actually quite a way ahead in kind of climate resilience. They're being really proactive and asking questions, what can we do today to sort of prevent those losses in the future? There's also a side of it, they have had losses impact them historically. This has kind of raised the bar of, we now understand the importance and the relevance of acting early. You know, if this loss were to happen again, it would really impact kind of our long-term revenue and sales. So when I'm talking about the kind of climate resilience services that we do at ZRS, we're kind of going through those phases at the top. So that phase one, portfolio analysis, so that's the spotlight that Neha has just demonstrated. So that's to identify and prioritize. We then work towards phase two. So, okay, I know where those sites are. Let's go on that site. So that can be a desktop analysis with a climate resilience specialist, reviewing a lot more regional, local data and understanding the building in more depth. We will send a risk specialist on site. So that's really, really valuable to actually look at what's going on the ground. Sometimes we go to site and we say, actually, what we thought was a high risk before we went to that site, we can actually reduce the risk. They've got really good maintenance, they've got really good controls. The building is actually sat at a much higher elevation than we first expected, or it can go the other way. So for this manufacturer, it was actually drought that took us by surprise, where it isn't a hazard that you commonly think of as high risk in the UK, but because we're not used to having these climate hazards impact us, we're not ready for them if they do impact us. So if you compare the UK to kind of manufacturing sites in Spain or kind of maybe South Africa, they're more likely to have backup water tanks. They've had drought conditions for several years, so they know how to adapt already to these climate hazards. So that's probably the main trend we're seeing when it comes to kind of climate risk assessments on sites. It's the hazards that we aren't used to and we're unprepared for that are likely to kind of cause the biggest impact to that site. One thing that I think is probably the most hidden hazard in the UK is heat. We don't take it seriously enough. When our kind of heat waves come from April to August, we're not prepared for them. So we're very reactive to heat waves, and kind of sites that they have air conditioning, they have shading, do really well. But those sites that kind of are, they rely on natural ventilation. They really struggle to keep temperatures low. And this causes a big risk to the workforce as well, especially when temperatures start exceeding over 30 degrees, which we're more likely to see in the UK. But sort of the benefit to this customer was we had a series of sites we wanted to work on. We discussed with the site, what are those critical sites to you? So where is your main production facility, or your kind of the supplier that you get one resource from? Start there. So where are those kind of really high value assets in terms of storage? Is it the only place that you're storing this one good? Is it the only place that can manufacture this one product? Start there, because if that site goes down, it's likely to disrupt the much wider kind of production line. So from there, you can prioritize. So, we don't have budget to undertake everything we want to do everywhere. So kind of prioritize, okay, year one, we can realistically look at sites 1 to 5, year 2, we'll look at 2 to 10. And then from those site visits, we can kind of understand a bit more about the site. So our financial losses when we go on site are a lot more detailed. So the information that you just saw from Neha, this is 5 data points on vulnerability. If we go to site, we're looking at anything we can. So if a flood happened, one site that I worked with, they've had a flood event happen. And I could see from that kind of example, they responded really well. So within 3 days, they were back up and running. The facility was cleaned out, and it didn't actually cause too much business interruption. If I hadn't gone to that site and I looked at the data and the kind of vulnerability at that manufacturing site, I would have said, the days of business interruption would be much, much longer. There's a real value of speaking to people on site, looking at historic events, and just getting a better feel of what's going on at that site. It's also good to include kind of local information. When we do a portfolio analysis, we're looking at one point at that site, whereas if you're looking at a site in the UK, look at the local area. So kind of what water courses are near me. Are they well maintained? We find that in some UK manufacturing sites, there's lots of kind of waterways and culverts that we don't manage very well. We don't take responsibility to manage, and this can back up quite a lot with debris and then cause water to flow back into manufacturing sites. So it's kind of that wider awareness. It's not just what's happening at that one site, but also what's happening around that site that could impact the hazard and sort of increase the risk to that building. We've also looked at this organization's supplier locations. So as you saw just on the spotlight, we mapped out exactly what are the risks across your suppliers. So this was just looking at the hazard level. One thing we kind of recommend going forward is when it comes to suppliers, start small. So identify your tier 1 suppliers, get really good information on tier 1, do that analysis really well, and then move on to tier 2. So rather than try and do everything all at once and collect bad data, it's good to just start off with tier 1, a small portfolio, see the value it has in terms of the outputs, and then build on that year 1, year 2, year 3. So yeah, in terms of next steps for this client, we're continuing to do site level assessments across their portfolio, and then hopefully mapping out some more of those supplier locations. So that's everything I wanted to talk to you about today. But just to introduce the wider team in the UK, this is our team in the UK. So we've got Dan, Neha, myself, Andrew, Tom, James. We also have Ben and Bernie. So we're quite a large team in the UK, distributed all around the UK, so up in Scotland, London and Bristol. But then again, we do have a much wider team globally. So we have climate risk specialists in Spain, Germany, Australia, the US. So if you do have sites located across the globe, there'll be a risk specialist quite close on hand if you are interested in kind of speaking to your customers about the spotlight on-site assessments. And last bit of information for me is we've gone through a lot in, I think, 45 minutes. So if you are interested in any more information, or you'd like to see kind of a more in detailed demo of the Spotlight, yeah, just reach out to us. We can more than happy to do that. I'll hand back to Niall.
Brilliant. Thank you very much, guys. And yeah, we will send around this code and after the session. So if you want to get in touch with Nick or Neha or anyone else in the team, we can definitely arrange that. So I think we've got some time for some questions, which is great. So please do, if you've got anything you want to ask, feel free to put it into the chat. We've got one here to kick us off. So I'm not sure which one of you wants to take this, but the question is, where can you start looking for data to support with financial loss models?
That's a really good question. So kind of as I alluded to earlier, you probably have more data in-house than you realize. When I first came into insurance, it was a new world to me, but speak to your insurance representative within your organization. They probably have the most detailed information on each building, when it was built, construction. So I think that's always a really good place to start is, yeah, look internally.
Brilliant, thank you. Just give it a minute in case there's anything else that anybody wants to ask about today's session. There's another one here. So what is the difference between an on-site assessment financial loss model and portfolio view financial losses?
Yeah, I'm happy to explain what that is. So put simply, it's the level of detail. So when you're looking at a portfolio level, it's not realistic to think you can collect as many data points for each site across a portfolio. So this is, you know, portfolios of 50 to 300 to 1,000. As you go on site, you have a lot more time to kind of collect data. So there's a more human element when it comes to on-site financial loss models. The kind of portfolio ones, these are based on sort of average losses, and you refine that by 5 data points from vulnerability. Whereas kind of the on-site is, you know, looking at historic events, looking more at kind of, you can incorporate elevation data. There's a lot more that goes into it when it comes to a site-specific loss model. And the kind of basis of the outputs from on-site is to give you a more tailored output to say, okay, we would recommend doing this adaptation solution here or maybe here. Whereas if you're looking at a portfolio view loss model, we wouldn't recommend saying, you can directly say, do X, Y, and Z at this site. So at portfolio level, use it to prioritize. It's really valuable. But then if you're looking to actually look at, okay, what do I do and where do I do it? You need to do that on-site level detail first.
Brilliant. Thank you very much. Just think that, check the Q&A. I think there might be something in here. So we've got a message from Tom saying, what is the difference between an on-site assessment financial loss model and, oh wait, sorry, that's the same question. I've just seen it in the other chat.
I think just to add on Nick's point, during on-sites, because we can get so much more data, we can really look into the site. It's use the global maps, the local maps, and also the site itself, have a look at the historical data. We are able to give a lot more detail on those losses, and we can actually do some more calculations on return on investment, just because we have more of that granular view on that site itself and granular data. So on-sites will always give you a better representation, I guess, of what your losses and return on investment may be compared to looking at it on a portfolio level. It's a good starting point, but the on-sites is really where we get the most detail out.
Brilliant. Thank you, Neha, for adding on to that. We have a question here saying, or asking, if a client is first trying to understand financial losses, where do you advise they start?
It's a good question. Okay, yeah, I think it can be quite daunting of where do you begin. There's lots of data going on compared to climate hazard exposure. I'd say if you're really starting out, find out what hazards are likely to impact you first. So before you dive into site-based information, I'd recommend doing sort of a climate portfolio analysis. So just looking at the climate data itself. And for that, you just need to know very simply, where is the site located? Find out what those climate hazards are, find out what the material hazards are, start incorporating sort of exposure metrics such as property value. So you can sort of, like Naya said, kind of say, okay, this is the high hazard, this is high exposure. Understand that first. And then once you've identified maybe your top 20% of sites globally or in the UK, I'd then say start kind of undertaking that financial quantification on that small portfolio to start with. Find the value to you. What do you need to know? What do you not need to know? And then upscale from there.
Brilliant. Thank you very much. I'll just give it another 30 seconds, see if anyone wants to ask anything else. If not, it's probably a good time to draw to a close. Last chance for anyone. I think we're probably okay to wrap it up. So thank you so much, everyone, for joining us this morning. We hope you found the session useful and certainly interesting. It's been great to see so many of you join, and thank you very much also to our speakers Nick and Neha for walking through that with us today. So please do keep an eye out for our email that we'll send around after. We'll have some feedback. It'd be great if you could let us know what you enjoyed about today, what you think we could cover in the future, any improvements, that sort of thing. But for now, I think we will leave it there. So thank you once again, everyone, and I hope you enjoy the rest of your Friday and the weekend when it arrives. Thank you all.